Hello everyone, welcome to our YouTube channel Making Investments Simple, and today I would be talking about an interesting question which someone had asked about the difference between a call and put short selling option, short position in options trading. So if you do not know what is a call and put option, you can go through my basics of call and basics of options trading, and this is basically about selling call and put position. So in simple terms, if you think an stock or underlying asset will go down, then you basically buy a put, and if you think that an underlying stock or an asset will go up, you buy a call option. Now when you do that, you also have another option. That means if the stock is supposed to go down, you can buy put, which will make you money, of course, and you can also sell a call option. Okay, so that is another option which you can do. Similarly, if you think a stock will go up, you can either buy call option or sell a put option. In both ways you make money. However, shorting a position means your risk becomes unlimited, meaning if the stock goes in opposite direction, you can actually lose huge amount of money, and that's the reason these brokerage houses block the amount which is equal to futures trading. So if you want to buy one lot of nifty futures, you actually need 60 to 70,000 rupees, and if you want to sell a call option or a put option, you actually require a similar amount of margin. Again, you can see the brokerage and margin calculator for your broker to see the exact number, and that is the reason um, this brokerage, this margin is blocked. To as soon as your loss becomes 50 or 80%, then your position automatically gets squared off. So that's a topic I don't want to complicate this topic more, but I just want to tell you that's the reason margin is blocked. So coming back to your question, so you can actually buy a call option if you think the stock will go up, or sell a put option. Both ways, in both directions, you make money. It's the same way. Okay. Now, why people actually short sell a put? If you think the stock will go up, why you can directly buy a call option, right? And rather than buying giving a huge margin, why do you do that? Now, before I get answer that, let me tell you that buying a call option is much cheaper. You can actually buy a call option for 6,000 or even 10,000 or 20,000 rupees, whereas selling an option actually requires 70 to 80,000. So you can see the difference, right? Now, and even your total risk for that trade is the total amount, 5,000 or 10,000. But by selling the option, your risk becomes unlimited, because if stocks goes in opposite direction, you lose a huge amount of money. So but why do people do this? Why do risk this? Now, the reason why this is done is selling a put option. In case if you are thinking the stock will go up, selling a put option gives you two benefits. The first benefit is, yes, if the stock actually if your prediction is right and the stock goes up, you make money from your sell position. However, if the stock doesn't move at all, it stays almost in the range bound session, it goes up, it comes down, and what happens is the premium decay happens. That means the premiums go down because of the time value left, because especially this happens a lot in the last 2 weeks of expiry. The last 2 weeks of expiry, please be very careful. Do not buy call or put options blindly. If without any particular news and things like that, you really have to be very careful when you are buying a call or put option. Now, because premium decays faster. So if you have suddenly, if you think the stock will go up, and if you buy a call option at 6 rupees, and the stock is trading in the same range, sideways, you will lose money. The premium will keep on coming down. There will be a lot of profit booking and premium decay happens. So that's when people actually short put options. So what happens is premium decay happens both sides. So if you are buying a call option in that case, and if you have sold a put option, both sides premium decay will happen, but you will make more money using the put option, because premium decay is also happening and your prediction whether right, exactly right, the stock is not going up, is sideways, you make money. However, you also have take a huge risk of losing money, because if you have sold a put option and the stock is coming down, the markets are crashing, the stock is crashing, then there is a chance that you lose more money. For that, there is something called, I do not know the exact put spread name, put spread. What you can do is you can actually buy a nearest put option. For example, the stock is trading at 285 rupees, and you expect uh, the stock will go up. 290 call is something which you can buy, or you can actually buy 280. You can sell 280 put, and for reducing and hedging your position, you can reduce your overall risk by buying 270 put to hedge your position. So that means even if the value of the stock comes down to 80, you still will make money, and you would lose less money than the actually unlimited loss, the option, the criteria. So that is the way you should actually trade in options with complete. There is no perfect hedge, but this hedge will reduce your risk. The risk will be much lesser than selling blindly 280 put option. So that's the thing which you should always keep in mind. And even if its stock crashes, you would lose less money, because 270 put will still be profitable. 280 put might be in loss, but you would lose less money. So that's exactly how you should trade in options. So hope you enjoyed this informative video. As I told you, options are purely based on mathematics, and once you understand it, it is very interesting to understand and even trade in options. So I am here to answer all your questions, whatever I know. If I do not know, I will research and get back to you, but feel free to ask me any clarifications or doubt, and please do not blindly trade on the example which I give, because this is just an example. I do not even know on what price Vedanta is trading at the moment. So hope you enjoyed this video. Please feel free to comment and give me feedback on my videos. I'll be happy to take your feedback and create more quality videos in future. Thank you, and I will see you again on my next video.